Hello everyone and welcome to the FinTech Times. I'm Tyler and today we're here at MoneyLIVE in London. Right now I'm joined by Andrew. Andrew, how are you?
Hi, good afternoon. I'm very well, thank you.
Good,
Yep.
good. Are you enjoying the event?
It's very good, yeah. Lots of good talks this morning.
Yeah, it's been. I really enjoyed all of the conferences that I've done so far. It's been fantastic. Well, Andrew, before we go into our conversation, why don't we start by you introducing yourself, tell us a bit about who you are and where you come from?
Yeah, so I'm Andrew Ducker. I work for an organisation called Icon Solutions and I'm a senior payments consultant for them. So we work with clients and advise them on payments product innovation and how they then need to invest in the underlying systems to enable those products and channels to operate well for customers.
Well, I imagine your work has been very, very busy recently as more people move to digital.
Yep.
Yeah, and this being at an event like this is a great chance to meet other people, other like-minded people in the industry, and it's been fantastic. So, my first question for you, Andrew, really is, this whole event today, and especially a lot in more of a holistic sense of what the industry is covering, we look at it, of course, through the lens of the pandemic. The pandemic hasn't necessarily created digital payments, but it's certainly driven it forward from what I understand. What I would be really interested to know, Andrew, is what is your take on the new normal in payments?
So I think the new normal in payments is that the pandemic the last 2 years have accelerated trends, but the trends were already there in a number of places. So digital or electronic payments, we've been using card payments for 30 years or more. We've been doing digital banking, online banking since the late 90s, mobile banking for the last 10 years or more. So people have been using it, but I think the new normal is that digital payments have accelerated over the last 2 years into the sort of the mass market and to the late adopters. So people who otherwise may have been another 3 or 4 years till they started have actually seen the reason to use them because they've been stuck at home or they've had a sense that using cash is less hygienic than using electronic payments. So the rise of contactless, which kicked off heavily in sort of 2013-14, that's now gone deep into late adopters who just use it automatically now rather than cash. So I think that's been a big trend. I think for businesses, they're seeing that their customers just want the greater efficiency and the greater speed of digital payments, and that that's becoming an expectation for business users, that they can link up their systems much more easily into the payments products and into their back office financial systems, and payments are much more automated, much less hassle for the finance teams to process.
No, I completely agree with you, and I think it's really pushed people to believe in paytech especially, and to really trust the process. Of course, it's handling financial information, which is very sensitive data, and how the technology is able to do that is really an underlying question of the industry and of the technology that it produces. Speaking of which, I was really interested to know, we've seen so much development very quickly in the paytech space. Are there any models that you've got your eye on right now that have showing great promise or great interest? I mean, what's your view?
So I think the developments, one very obvious angle is the reduction of cash and the move to, I think people talk about a less cash society, not necessarily a cashless society, but where cash becomes more niche for a few sort of areas of the population. So the opportunity to use electronic payments in more and more mainstream activities is there now, and I think cash has declined from sort of 20 billion payments a year 10 years ago to about 5 billion, 6 billion in 2020 on the latest number I've saw, so that's quite a dramatic fall. I think on the other payment models that are coming through, the UK has had its real-time payment system since about 2008, but what you're seeing now is more opportunities for consumer purchases to be made that actually transfer over the real-time payments network. And there's something called request to pay, which enables the biller or the recipient of funds to initiate a transaction by sending a request, and then the user has a secure and easy way of accepting the payment and triggering the money actually going back to the merchant. Now that's an interesting model because request to pay, it can support invoicing between businesses, where it just makes it a much smoother, cost-effective process. It can support regular bills for consumers like gas, electricity, mobile phone subscription. The opportunities there as an alternative to direct debit, which some people might want that choice. It can support collecting money from friends and family. If you're the one who's paid for a bill with a group of friends for a meal, it's very easy to collect the money. And Holland, there's something called Tikkie in Holland that's a very good example of that, that's really out mainstream. People talk about tickieing in the way that you Google or you Hoover. It's become the verb that they use for transferring the money. And then finally, I was going to mention, I think Request Pay could actually start to have an impact on card payments at sort of retail, whether that's online or in store, as an alternative to paying with your card, which is obviously very, very dominant in the UK at the moment.
Well, I've definitely got to let my friends know about that Tikkie service. I've been splitting bills unevenly for too long.
That's only in the Netherlands, but yeah, hopefully we'll see innovations like that in the UK.
Well, I've got to move to the Netherlands now. It's my only choice, right? Andrew, in our conversation so far, you've touched upon points where you've mentioned about people embracing the technology, and especially about people embracing the technology maybe sooner than was anticipated. But I was just wondering, as people who work in the industry, we talk about these terms, we use these sort of descriptions of products very easily because we understand them. But if we were just to grab somebody from the street, for example, I'm sure that they wouldn't have as comprehensive an understanding. So I think my question to you is, how can we make sure that these services that are very new, very sparkly, very powerful in fact, how can we make sure that they're accessible to the masses?
Yeah, so I think that's always a very good challenge. At one level, basic consumer requirements don't change over long periods of time. No, so choice, convenience, control, so that you know when the money is leaving. Security, so that you feel that your money is safe. Reliability. It needs to work every time you want to make a payment. You don't want to be missing a mortgage payment or not receiving your salary on time. So those fundamental requirements are important. I think accessibility, part of that comes back to the providers, and how do you move payments away just from being the preserve of the big banks. And a lot of progress has been made, access to payment systems like fast payments over the last decade. Open banking in the last 4 or 5 years has deliberately, put in place regulation whereby the core, the CMA9, the 9 biggest banks in the UK, have to share customer data with third-party providers who are signed up through the right regulatory process, but they have to share that data if that third party wants to use the data to offer some targeted service to you, or if they want to process payments on behalf of the end customer. So open banking is another big opportunity. I think access as well is through making digital products and services digestible, usable for the mass market, and not just the so-called digerati, the sort of the leading edge customers. And that's what's accelerated in the pandemic is, people's, elderly people, less technically sort of literate people are much more comfortable now using payments, because banks have had to focus on not just launching it, but how do you drive mass adoption, and that's been very healthy.
Well, when we think about this idea of mass adoption, it's, as you said, is sort of in one part due to the innovation and the way it's put across, but in another part, and quite a large part in fact, is how it's regulated. Which regulations do you see happening maybe towards the end of last year and in this year that are going to have the biggest impact?
Yeah. So I think I'll talk 2 examples there. There's a lot of concern, a lot of effort within the industry at the moment around tackling fraud on digital electronic payments. There've been, people using cards that aren't theirs. Things like strong customer authentication, and also push payment frauds where people are tricked into sending money to the wrong recipient. And there's something called confirmation of payee that's been in place for 2 or 3 years. I think in terms of regulation currently, one I've mentioned there, strong customer authentication, has just passed its final deadline for merchants and acquirers, the people who process the accepting of card payments, to enforce these strong customer authentications, which is now you're more likely to receive one of those requirements to get a text message, enter a 6-digit code into the web browser or into the app for your payment to go through. So that's a significant regulation that's finally hit the road, and organisations have to comply with it for the stipulated payment types. There's one other area of regulation. It's sort of on the edge of regulation, or it's just industry collaborative development, which is around data. So there's a big data standard within payment systems called ISO 20022 that is being driven out into the, well, is being rolled out into the industry, driven by the big market payment systems like the Bank of England clearing system, clearing and settlement system, or like faster payments and BACS in the UK when they evolved to NPA, to the new payment architecture. So this new data standard, makes it more interoperable, to use that word, right up and down the payments chain from sender to recipient, with a standard format for data that's associated with the payment. And that enables better checks of who the people are making the payment and receiving it, to tackle crime. It enables more efficient processing of payments, because banks get fewer errors where they don't quite think the address is right or it's in the wrong format. So it resolves a lot of those problems with processing errors. And finally, by having better information about who's making a payment and why it's being made, banks can actually start to target and tailor their services more precisely to different types of customer, all off the back of this better quality data.
Well, that's you really highlighted how regulations drive paytech and make it a lot safer for other people to use. And it's I think in the UK, we really have this cultivated sort of ecosystem of good regulation when compared to other markets. Just touching upon that idea about the UK and about fintech, and as my final question to you, Andrew, I must know, how can the UK position itself as a world leader, as an industry leader in this department?
So I think the UK is in a healthy position, and it's how do you sort of continue to sort of fine-tune and improve. So we have the payment system regulator in the UK, and their headline objectives, firstly is around meeting the needs of end users, but then it is about fostering competition and enabling innovation. So they are they're not there just to mandate things and tell the industry what to do. It's about creating an environment that then you have competitors innovating, and driving the pace of innovation. And that's what's driven tech in Silicon Valley. It's commercial competitors rather than some state sort of mandate that drives it. So I think the UK is about continuing to have that environment where new startups can come into the market, can develop something and get it launched and plug it into the existing payments infrastructure easily, so that they don't have high hurdles to get it working. So interoperable with the big banks and with the existing payment systems is important, but retaining that healthy competitive environment. I think another area where regulation potentially needs to be stronger, and everyone knows the challenge, is around financial crime. So there are big numbers going out through fraud every year in digital payments, and the industry is working together and needs to carry on, really challenging how it can do better and tune up the ability to stop some of the common fraud cases that are out there, and make more people comfortable that payments are safe when they're using digital instead of more tangible cash.
That's some very interesting points you put across there, Andrew. Thank you so much for taking the time to speak to the FinTech Times, and I hope you enjoy the rest of the event. Thank you very much.
Thank you.